666.
Saudi Arabia's non-oil private sector continued to see robust growth in April. Reuters reports, citing headline seasonally adjusted S&P Global Saudi Arabia Purchasing Managers Index (PMI) stood at 55.7 for the month. A PMI reading over 50 indicates growth. The growth fell slightly from the 66.8 in March as, quote, as fears over inflation began to weigh on demand, unquote, the report added. This brought the PMI to a 3-month low as companies sharply raised selling charges to pass on higher input costs, Bloomberg reports.
Non-oil economy, the name of the game for Saudi Arabia. This is very, very encouraging news for them as they push forward with Vision 2030. Very encouraging data. I mean, a lot of this is, the oil economy still drives a lot of what's happening in Saudi Arabia. And that's the goal, is to not be as dependent on that. But this is quite encouraging. The oil economy is growing, but so is the non-oil economy. And those are, 56.8 is significant. I mean, that was the March figure, but it's pretty good.
The PMI
yep.
March. Yeah.
Yep.
Yeah. The non-oil, this is a key pillar of Vision 2030 to get that non-oil revenue up. And there's, by any measure, they've done a good job. In 2010, non-oil revenues were 9.5% of government revenue, that's 19 billion. In 2020, it was 38% at 86 billion. I mean, that's significant. Even in a commodity super cycle, it's projected in 2022 to be 46%. Commodity super cycle meaning that oil revenues are huge. But even this year, it's projected to be almost 50% non-oil income, up from 9.5% in 2010. So 12 years ago. So that's really something to hang your hat on if you're Saudi Arabia trying to diversify the economy and generate other sources of revenue. Now, some of this obviously is coming from VAT and higher taxes, but a lot of it's coming from a more productive, more efficient, and hopefully more prosperous non-oil sector.
They're facing some of the same headwinds we are here in the United States, like inflation, which started to sort of erode a little bit at that number, but definitely very encouraging. Richard, we just talked earlier in this program about the tourism sector and why they're doing it, and this is one of the reasons they want to create jobs that are not in the oil sector. They want to create an economy that isn't oil dependent. Oil prices are high now, but they know that they won't always be this way. They weren't a year and a half ago. So just very, very interesting.